All right, so today we're going to be diving into Bitcoin and how it can hold up against a very active economy, what we're seeing in terms of inflation, also the whole aspect around the future of where interest rates might be going this year. We'll dive in deep. My name is Paul Barron. Welcome back into Tech Path. We thought, hey, let's get in and dive into this today with Mark Yusko. He's been on our show before. I want to welcome you back, Mark, to the show. Thanks so much for stopping in.
No, Paul, thanks for having me back. It's an exciting time to be chatting with the markets in turmoil. So lots to talk about.
For sure. CEO and Chief Investment Officer, of course, over at Morgan Creek and Managing Partner at Morgan Creek Digital Assets. So Mark knows his stuff. He's been on our show before. We had a really good conversation around kind of the evolution of where Bitcoin was going. It was right before I think we started to see Bitcoin move to its all-time high. Perfect timing on the last interview. I want to kind of get into that today. But really, the topic of today's discussion, Mark, is leaning into the resiliency of digital assets, obviously Bitcoin leading the way. Your thoughts on where a couple of things we want to dive into. First is of course, the inflation aspect. We've seen the CPI numbers come back stronger than ever in terms of inflation. We haven't seen these kind of inflation numbers really since the 80s. When you look at that and you look at the rest of 22, knowing what we're going to probably see from Fed Chair Powell and the interest rate moves, where do you think Bitcoin is going to hold up in relationship to those two factors kind of imposing their will upon the Bitcoin community?
Yeah, look, Paul, it's a really insightful question in that interest rate policies and central bank policies in particular clearly have an impact on digital assets and most notably Bitcoin, because it is ostensibly digital gold, right? It may have other use cases in the future as a base layer for the internet of value, or the trust net, as I like to call it. But at least in its first iteration here over the last 13 years, it has evolved to be the digital equivalent of gold. And gold really is the only money. Right? For 5,000 years, gold has existed as a perfect store of value. 1 ounce bought a fine person's suit from the beginning of the Egyptian times, to a suit of armor, to a zoot suit in the 20s, to Savile Row today. And one of the challenges of gold is it's heavy and it's not very divisible. If I have a bar of gold, I can't give you half by breaking it in half. It's kind of hard. So Bitcoin is more portable, right? All of it fits on a single cell phone, and it's very divisible down to a single Satoshi, 8 decimal points of a whole Bitcoin. So when you think about that and you think about where central banks find themselves today, they're at this very interesting inflection point I refer to as the killer Ds, right? We have bad demographics. So we have an aging population in the West.
Right.
Japan is the oldest, then Europe, then the United States. Every single day for the next decade in the US and Europe, 10,000 people, both here in the US and 10,000 people in Europe, will turn 65. 65 to 85-year-olds are not as productive, perfectly nice people, but not as productive. They don't spend as much, really bad for productivity and GDP growth. Working age population declines. And you throw on top of that massive debt. And every empire in the history of mankind has collapsed the same way. It collapses from too much debt. And again, Japan is kind of the lead sled dog here. We've seen what their central bank has had to do over the past few decades and just buy and buy and buy. They are the only buyer of Japanese government bonds. Nobody wants to own a Japanese government bond in this environment with near zero rates and a debt to GDP ratio of 226. So the Bank of Japan buys them all. European Central Bank does the same thing with European debt, and the central bank in the US is doing the same thing with treasuries. So as countries become increasingly indebted, you only got 4 choices. You can pay it back. The problem is, even if you taxed everybody's wealth, forget their income, if you taxed everybody's wealth, you couldn't pay back the debt. Then you can restructure the debt. Problem is, someone have to take the other side. No one wants the other side of restructured debt. Or you can default on it. No, because then you lose power if you're in power. So you devalue it. And that devaluation is what's going on everywhere. And that's why digital assets, particularly Bitcoin, have been so strong with a lot of volatility, but over the long term have been very strong.
Why do you think we're seeing a little bit of a surge in terms of the US dollar and its value? Obviously, gold prices now dropping a bit. Some people now looking at, I think a story was here, gold prices looking at maybe to drop to 1600 by year end. With
Yep.
those kind of scenarios coming into play, the dollar potentially gaining strength, how does that play into the economies from a digital asset side, especially as you lean into Bitcoin being as a use case for payment in a lot of different infrastructures that are being developed right now? Obviously, we've seen El Salvador. How does that play into this with the dollar value rising slightly?
Yeah. Well, again, another really important point, Paul. If you think about what we use to value assets, we have to use some currency. We look at the value of gold. Well, in what? Gold in dollars, gold in
Mhm.
yen, gold in euro, gold in Argentinian pesos. Same thing with Bitcoin. Bitcoin in dollars has gone up a lot. From 10,000 to as much as 60,000, then back down to 40,000. But wait a second, what if we denominated it in Argentinian pesos
Yeah,
or Venezuelan bolivars? There's never been a bear market. The price has gone up and up and up and up because those currencies have gotten devalued.
sure.
So currencies are really a unique thing. And gold is both a commodity and a currency, has been that for, again, 5,000 years. Bitcoin is a currency. It's deemed a commodity or a collectible by tax authorities, but it really is a currency. And therefore, we have to think about it relative to some other currency. So when I look at it relative to dollars in the long run, it's just been a straight up line, right? The
Mhm.
value of Bitcoin per dollar has been rising exponentially, really, over the past 13 years. If we look at the short term, to your point, if the dollar is going to strengthen against other currencies, and the yen and the euro, it's clear the Japanese yen in dollars has been getting absolutely lambasted, gone from 115 to 128 in the last month or so. The euro, similar. And even the renminbi, which had been very strong relative to the dollar over the past year, in the last couple of weeks has turned and gone the other way. So in that case, gold prices probably do drop a little bit, gold in dollars, and there could be pressure on Bitcoin in dollars short term.
Yeah, yeah. All right. So, okay. So pressure's coming in. We obviously have seen, Chair Powell talk about the basis points move. We've got one coming up now. Again, likelihood. I think people in the market are leaning in that we're going to see another 50 basis points resolve out in terms of interest rates. We could see rates considerably higher by year end. Does Bitcoin weather through this and hold, in this range of say 35 to 45 in terms of a price, or do you think we could see a Bitcoin adjustment in a downward trend because of the pressures due to the interest rate hikes coming?
Yeah, look, if and it's a capital I, capital F, if because I don't really think it's going to happen, but if Powell were to stick to his guns and actually raise rates the 7 to 10 times that the market is predicting, I will
Hmm.
take the under, like way under. Talk about 50 basis points in May. Some say as high as 75. I'd be shocked if they do 25. At the rate the markets are correcting because of
Yeah.
this withdrawal of liquidity, I think he's going to have to cave. And I dub it the Powell pivot. I think the Powell pivot is coming. I think it's going to be very dramatic. And I think the bond markets are kind of telling us that.
Hmm.
Recently, last 5 days, bond markets have turned around after just getting cremated. Long bonds down 20%, the ag index down 10%. They're now up 2.5% and 5% respectively over the past couple of days. And I think that's telling us that the pivot's coming. So capital I, capital F, if the Fed were to go through and raise rates to 3.5, 4%, that would be a very painful time for Bitcoin. I do think it would test the lows around 30 to 33,000. That's where I think fair value of the Bitcoin network is today.
Mhm.
If what happens is what I think is they raise a couple times and then they're done, and then the pivot comes and they're back to stimulating and buying more bonds and expanding the balance sheet, then I think we're back off to the races, and I think we could see the beginnings of that next upward leg. But look, we're in crypto winter. It's likely to last for another 6 to 9 months. It doesn't have to last that long, but it's pretty likely that that's going to be the case.
I was looking at this CoinDesk article, Will Rising Interest Rates Sink the Ecosystem? One of the things they kind of noted on here on just the spikes right here, 30-year fixed rate mortgages averaging 5.3. This was April 19th, 12-year high. Again, that gets back into one of the controllable assets out there in terms of an asset class being real estate. Now, down here in Florida, we have no inventory, so real estate is, we're kind of in that bubble of no inventory, somewhat still acceptable rates, so market prices are just ridiculous. But for most of the US and even abroad, we're starting to see a little bit of a flinch in the real estate industry overall. Do you feel like that's going to have an indicating factor for the Fed to start to do what you're talking about, and that is a potential pivot, whether it's maybe through the summer months here in the very near future?
Yeah, I mean, seasonally, this is always the time that interest rates rise. A lot of people move this time of year to
Mhm.
get ready for the next school year, and so historically, the mortgage companies magically raise rates in the March, April, May period, and they tend to then peak and fade the rest of the year. I think again that's likely to happen this year. I do think that global real estate markets have started to cool, not in places like Florida or even here in Chapel Hill, where Apple announced they're going to put their new headquarters on the East Coast in Raleigh, and 4,000 people come into the area. So housing
Right.
prices have gone grazy, but those people are coming from somewhere. So prices in San Francisco rolled over hard. Prices in New York rolled over hard. So I think you're right that those changes where the 30-year mortgage rate doubled in the past 6 weeks,
Mhm.
we've started to see price decreases for the first time in local real estate listings. Now prices had gone up far too fast, but all of this is inextricably linked. At the end of the day, we have created what I call the fiat fiasco by printing unlimited amounts of money in the US, in Europe, and in Japan. So the Western governments have flooded the world with currency, and they've just created massive pressures on everything from nat gas prices to traditional gasoline prices to home prices, particularly first time home buyer homes, and everything else, used cars. And then you throw on top of that bad policies around lockdowns that created supply chain havoc. You got more doubling down on that in China that I hope will pass here after the May 1st holiday. At least that's the rumor. So all of this comes back to money illusion. We have this perception that prices are rising because of inflation. Well, it's not really inflation. Inflation is caused when there's excess demand and limited supply, or limited
Right.
supply and stable demand. We don't really have either one of those. We did have a disruption in oil supply because of lockdowns, but that got immediately reversed. Oil prices did double, and most of the CPI increase over the past year was really oil and used car prices. Used car prices because of chip shortages. Both of those have gone away. Used car prices have fallen 3 months in a row, largest decline since 1969 last month. Oil prices are down dramatically from their peak at 120, down just around $100. So I think both of those will fade. I think the CPI numbers will fade. I think the pressure to raise rates will fade. And at the end of the day, we are built on a mountain of debt. That debt is not serviceable globally at higher interest rates. So I think we're going to be in low rates. And I think there's more of a chance of deflation on the
Yeah.
horizon than
Mhm.
inflation. And that
Mhm.
means more money printing, which is good for digital assets.
Yeah, I was looking at, well, and also I think as we start to lean into what's happening in the tech space, when you look at just stock, the market right now, Also looking at China, China's tech layoffs could become a self-inflicted headache for Xi. And the reason I bring this one up is it feels like this is starting to happen here in the US in terms of just the amount of tech sector layoffs that are starting to roll out into the place. A lot of that is because of the extreme valuation scenarios that we've seen. With that being the case, tech obviously leading most of the time assets in terms of traditional assets on the stock exchange. Do you see that also putting some pressure on Powell saying, all right, listen, now we have companies laying people off. We have companies restructuring how they're looking at valuations, which means a complete different approach into the capital markets, including VCs, angel investors, all that really starts taking effect. With what's happened in China and that now happening potentially here in the US, will that have leverage in on Chair Powell also to slow that?
Oh, look, I think, again, great point. China was the leading economic indicator here. They tightened 18 months ago. They were the first ones to tighten kind of post lockdowns. They withdrew a lot of liquidity because their real estate market was overheating. They raised rates and changed liquidity until something broke, right? We had some
Yeah,
of the real estate companies literally break and go bust,
sure.
and their economy turned over. Stock market collapsed. Some of their big tech stocks were down 60, 70%. Some of their tech stocks in certain industries like education, I mean, they've wiped these things out. They're down 90, 95, 98%. Didi down
Yep.
98%. So they showed no mercy. Now they've reversed that trend, and they've committed now to supporting the equity market and increasing liquidity. But I think the Fed took their cue from that and said, all right, well, we can raise rates till something breaks. But if you look around, the average stock in NASDAQ is down a lot, like
Yeah.
40 plus percent. The
Mm-hmm.
index is only down 20%. That's because the FANG stocks are still overvalued. But
Mm-hmm.
some of the stocks, Peloton, Zoom, I mean, these things
Yep.
are down 85, 90, 95%. And to your point, layoffs are happening. People are starting to see that they probably aren't going to grow at the rate they thought they were going to grow. So at some point, all of this breakage will be too much for Powell to bear. And the other thing people forget, he has not been reappointed yet, and it's a
Yeah.
midterm election.
Mm-hmm.
So in order to keep your job, I think he's going to have to make things better for the Democrats coming into midterms, because they are trailing badly in the polls and going to need a lot of help. And the last piece, Paul, and this is an important piece. So much of the market increase, like the company value increase, was just debt.
Yeah.
Margin debt was the highest it had ever been, and it's starting to unravel. And that's why you see these big down days, like as we're talking today.
Mm-hmm.
And when that happens, other things get liquidated. And this is interesting. You see these sharp drawdowns in Bitcoin or gold or even bonds. You say, well, that doesn't make sense. If stocks are getting hammered, why are these things going down too? I thought they were stores of value. They are. But when you get a margin call, right? When you
Mm-hmm.
bought an asset with too much debt, you don't get to sell what you want to sell. You
Yeah.
sell what you can sell. And
Yeah.
that's what's happened. And I think liquidations are happening across digital assets and across traditional stores of value.
Yeah, for sure. Well, and I think as we lean into the market right now, these are kind of the ebb and flows of what happens in these market corrections, which is what we're really in the middle of right now. And I would agree to your point. We've talked about this, here in our own Crypto Pit was just kind of our research team, and the whole idea around slowing CPI numbers, because the likelihood is we're going to see a little bit of slowing CPI numbers.
Yep.
And when I say CPI, the traditional consumer price index, we have our own CPI, which is our own research on the crypto power index, and we look at a slowing, sentiment number, which has continued to kind of point in a downward direction for Bitcoin. It is starting to slow slightly. So I feel like even though there has been some extreme greed or fear, I should say, in the market, we may start to see a little bit of recovery coming our way. And I think to your point is if Powell does start to soften slightly, It'll be interesting to see how that plays out. There are several things that have happened in the past few days, though, that I want to ping you on. And this is kind of somewhat relative to what's happening in the crypto markets, but bigger picture also. One of the things, obviously, Elon gets validated yesterday with the purchase of Twitter, and this, of course, could play into crypto payments and the whole ecosystem for crypto in general. What are your thoughts on this? Because we're seeing a lot of interesting opinions on Elon's purchase of Twitter. What are your thoughts?
Yeah, look, I think at the end of the day, we got to give the guy the benefit of the doubt. He says he's in favor of free speech and wants to make the platform more about free speech and less about censorship. That's awesome. Now, the other thing we got to remember is I think it's some crazy low number, like 4% of people actually use Twitter on a daily basis. Now, it clearly has a bigger social impact because things get posted on traditional media. But I think the active users is a relatively small percentage of the average person. Like my mom and dad are not on Twitter, so they're still watching Fox News. I'll give them the benefit of the doubt there. What I do think is clear is you have people like Jack and others who are clearly in favor of digital payments, crypto-related payments, Bitcoin and Lightning related payments. We've seen that with using the Strike app, which we're a portfolio investor in, and in using that for Bitcoin tipping. And I think you'll start to see other applications of Lightning and Bitcoin payments likely beyond Twitter. So I think when entrepreneurs kind of come together with a common direction, and I think we're seeing that with Elon and Jack, I think good things happen. Now, there's still a long way to go and a lot of resistance. I talk about this a little bit in that if you go back to the beginning of Bitcoin, 2009, the 2009 to 2015 period, that 6-year period was kind of, and I guess it wasn't Gandhi who said it, not Gandhi, Mandela who said it, but he borrowed it from someone else. I can't remember who it was. But first, they ignore you, right? So the first 6 years, they just ignored us, right? It just wasn't really. It was just a geeks and science project. Then they laugh at you. So from 2016 to 21, it was like, oh, look at those geeks and nerds, and what do they know? They're crazy. Well, then they fight you. And so 2022 to, call it 2025, 26, I think they're going to fight. And the incumbents, the banks, the brokerages, the payments processors, someone came out the other day and said that Lightning over Bitcoin is better than Visa as a payment rail, which is probably a factual statement because Visa is a 80-year-old technology. So this is probably better. Yeah. But that doesn't make Visa very happy or MasterCard very happy or the banks that process those payments very happy. So I think they're going to fight and they're going to use regulation. And we've got a banker-friendly regulator that has kind of said we're going to slow things down and we're going to make sure. And look, I'm all for slow and steady and measured and consistent and transparent and clear. I think all those are great objectives for the SEC. But I think what we need are a realization that this technology is inevitable. We are going to abandon the old rails. I heard a great line, again, I wish I could remember who to give credit to, but they said the problem with fintech is there's no tech, right? You're using 80-year-old technology and putting on a nice UX or UI. And yes, you're taking stuff out of the banking system, the legacy system. When was the last time you went into a bank branch? We can do everything from peer-to-peer lending to opening accounts digitally now. All of that's going to move into the decentralized DeFi world eventually, but they're going to fight, and we should be ready for that fight.
Yeah, well, obviously we've seen a lot happen with the XRP and Ripple case. What seems to be now a little bit on the backside of this likelihood that the SEC may take one here in terms of a loss on that. The ripple effect, no pun, but the ripple effect on the community could be pretty big here in where that is going, especially in the case of what you're talking about, and that is whether it's banks and institutions starting to really accept in digital assets as an alternative asset class and really started to lean into this. We've talked with a handful of bankers, including I think it was the Vast Bank guys who are based out of Tulsa, Oklahoma. They've started the process of integrating crypto into their deposit accounts, all those kind of things. So I think we're going to see some more banks moving in this direction. With all that being the case, XRP, let's say, wins or gets a settlement. You have a handful of regional banks starting to lean in a little bit, at least where you can do deposits on crypto and do some trades maybe within it. Then you've got this story right here, Fidelity, now allowing retirement savers to put Bitcoin in 401ks. With all those kind of things leaning in, do you feel like this is at least tilting the domino forward a little bit, or do you feel that we're still going to be in a resistance state of mind over the next few years?
Oh no, I think the domino has tipped and the dominoes are fallen, and that's why they're going to fight even harder. Right? You know, think about it. Why are they all so afraid? Well, if I leave my deposit in a bank, I get paid 0 to 0.5 interest. Sure. If I take it out, convert it to crypto, and deposit it in a Gemini or a BlockFi, I get paid 6 to 8%. That's far superior. But the banks, because they're highly levered, don't like to lose deposits. So they're going to fight that tooth and nail. The smart ones, like this Oklahoma bank, I mean, my wife's family's from Tulsa. I should go hang out with these guys. And, you know, that's genius in the sense that if you can't beat them, join them. And you can't beat them, right? This technology is inevitable. Every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate, everything, anything that's titleable, any asset in the world, all money will eventually be digital. It's not good, bad, or indifferent. It just is fact, right? We went from the analog world, physical pieces of paper, to the electronic world, where we put the physical piece of paper in the bank and we took out, you know, QSIPs or ones and zeros. And now we're going to pure digital ownership where we have a ledger that's public, encrypted, and we have title to whatever asset that's a token. See, part of the problem with tokens and NFTs and non-fungible tokens is people just conflate all these terms. They think a token is some little piece of gold or it's some JPEG. A non-fungible token is simply an entry on a ledger that grants you ownership of a unique digital asset.
Yep.
That's going to be everything in the world. Everything that's titleable will be a token. I like the term digital property rights better because that's what a NFT really is. It's a digital property right that gives you or me access to some asset. All of those assets are going to be digital, and the digital payment rails are going to replace all of the legacy rails. So those that embrace it are going to win. Those that fight it eventually are going to lose. And they'll be the buggy whip manufacturers of our age.
Yeah, I mean, definitely, we've seen this, you know, kind of this story play out before in the age of the internet and the birth of really what many companies thought would eventually become e-commerce, the big leaders. You know, if you look at just the history of Amazon, Amazon was at one time was trading at, you know, ridiculously low numbers, and Bezos himself even tells you that, you know, they struggled in being able just to get people to adopt what was happening, and eventually now what we see is kind of just the way of life.
No reason, absolutely no reason at all that Walmart or Target, with their installed base of warehouses and distribution, shouldn't have put Amazon out of business. Full stop, right? They had a brand, they had awareness, they had a loyal customer base. All they had to do is embrace the tech, right? I also say there's no reason that ABC, NBC, CBS should ever have lost the ability to dominate streaming. But they wouldn't give up their ad-based revenue model, and Netflix came in and torched them. So innovation, interestingly, usually can't happen at incumbent level because the incumbent is so entrenched and there's so many people around the table saying, oh, well, we can't risk our existing business to go after something new. We can't give up the good to go for the great. Whereas an upstart has nothing to lose. I mean, Jeff literally drove his car across the country, camped out in a friend of mine's couch, and, you know, sold the idea to a bunch of investors out in Seattle, and, you know, telling them they had this vision for selling books on the internet. People are like, what's the internet? I don't even know what the internet is. And his vision was a little grander than selling books. And clearly today everyone knows who Amazon is, and everybody
Yeah.
is dominated by them in the retail space. And there's even an investment strategy called Amazon roadkill, right? Where you go long Amazon and short everything else against it.
Right. Yeah.
So I think the same thing's going to happen in digital assets. You can, I call it long Bitcoin, short the bankers. And I don't want the bankers mad at me, but if you don't embrace this and don't partner with the great technologists, you're going to get left behind.
Yeah, for sure. To your point, last topic on this area is now we're starting to see sovereign states, nations, start to push back quite a bit. This story right here, crypto has no way to opt out of inflation. This is Bank of Canada, obviously slinging in, saying, wait a minute, we see some deposits starting to move out of banks, moving into crypto assets, digital assets as a whole. Now we see Canada actually stepping up and saying, just like many countries who have really kind of put the brakes on what's happening out there. Do you think it's too late for some of these countries? Because essentially now we
100%.
we have so many people that have really kind of leaped into a new era of how personal finance is being done today, and especially with DeFi. Where do you think the countries will come
the
in
lady
the next
doth
few years?
protest too much, methinks, right? Shakespeare was right. If you have to say it, it's already happened. If you have to say that Bitcoin is not a substitute, it can't protect you from the ravages of inflation. No, of course it can. That's the whole point, right? If you convert a failing fiat, of which all fiats fail, right? There have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. Every single one of them is worth less than where it started. And every single one will go to zero. That is the nature of fiat currencies. So if you opt out, if you convert fiat into a deflationary asset instead of an inflationary asset, which is Bitcoin, it will absolutely fundamentally, without question, protect you from the ravages of currency devaluation. Don't call it inflation. Call it what it is. As the central banks devalue their currency to get out of debt, you can protect your assets with Bitcoin. You just can. So I love when people try to use misinformation and propaganda to try to control a narrative. And it's so blatantly obvious that it's wrong. I think they just make themselves look stupid.
Yeah, it is. It's getting to that point where you're starting to see some missteps. At the same time, we're starting to see a little bit of even the legislators, a lot of the, I know obviously here we're in Florida, a little bit different state, but we see a lot of legislators now starting to lean into digital assets in general, at least to the point where they're trying to learn to what's really happening out there. So the likelihood is we'll most likely see some pretty major moves in both the midterms and definitely in the next presidential election, leaning into
Paul,
crypto
it's a
assets.
great point. So, Mayor Suarez down in Miami announced at Bitcoin 2022, we were down there with 25,000 of our closest friends. And he said, without announcing his own candidacy, which was clear, he said the next presidential election, 2024, will have 2 pro-Bitcoin candidates. And I 100% agree with him. And this midterm election, I think, is really going to be about 1 or 2 issues. One is gasoline prices, and 2, I think, is Bitcoin and digital assets. And candidates who help with those 2 things, I think, are going to landslide in, and people who go against it are going to lose. And I think it's because the millennial cohort, right, the 83 million millennials, which is now bigger than our generation, the boomers. You're a little bit younger, but maybe on the other side. But my generation, the boomers, we've lost it. And we are going to pass the torch. We're going to pass the baton. And if you don't cater to the digital natives, you're done. You're absolutely done, in my view.
Yeah, for sure. Last question to you, Mark, and that is, do you look at adoption? We've seen a variety of cycles kind of leaning into this. Some have been around legislation. People a lot of times will point to ETFs potentially being kind of that tipping point, even though some people will argue someone like a MicroStrategies really kind of already is an ETF in the sense that you can invest in something that is purely going after digital assets. What are some of the key things that have to happen this year in 2022 for adoption to really see a big curve here?
That's a really important insight that you just made about MicroStrategy. It is ostensibly an ETF. I mean, the value, the market cap of the company is the
Yeah.
market cap of the Bitcoin that they hold. They're basically valuing the business at zero today.
Hmm.
So whether you believe in the business or not, you can buy at NAV spot Bitcoin, which
Hmm.
is pretty cool. And the fact is, the SEC is not going to approve a spot ETF anytime soon, my opinion. I think the first one will ultimately be BlackRock because they're kind of part of the cabal.
Right.
But all the other competitors, no chance. They approved the futures-based one on December 18th of last year, or November 18th, whatever day it was.
Hmm.
And I think it was November. And you can pinpoint the peak of the Bitcoin market with that launch. And that's because it allows big banks to go short without having to take an underlying position in the physical. So it's been the case of commodities and futures markets forever. It's why gold prices have been spoofed for so long by JP Morgan and others. They've been caught multiple times.
Yeah.
And everyone says, well, why do you do that? It's against the rules. They're like, well, the fines are less than the profit. So we're going to keep
Yeah.
doing it until they fine us the right amount. And so the fact that you can create an asset out of thin air and go short is just bad for price discovery. So that's what we have today. And so these futures-based products are what they gave us, and yet it disrupts demand for physical spot Bitcoin, and I think that's a problem. Eventually, I think they will have to give in. They claim, oh, the markets are too volatile and they're too easy to manipulate. You mean different than Netflix losing $50 billion of
Hmm.
market cap in 2 hours
Yeah.
overnight while the markets were closed and no one could do anything about it? You mean manipulated differently than that? I mean, so I think the arguments fall on deaf ears, but they don't want the spot ETF to exist. When it does, then there's going to be a great trade to buy GBTC at a big discount before it converts. That'll be a fantastic trade, and buy dollars worth of Bitcoin for 77 cents today. So that's kind of cool. So lots of opportunity coming. I think at the end of the day, everything we've talked about is inevitable. It'll take longer than we all would like and hope, because this then they fight you phase is real, and
Yeah.
the incumbents really don't want to be disrupted. And I hearken back to when the horseless carriage came out. The horse-drawn carriages and the buggy whip manufacturers got a law passed in New York City that you had to have a person waving a red flag walk in front of your horseless carriage. It's where the term red flagging comes from. And ridiculous, right? Why did they do that? Well, to slow down the adoption, because who could pay someone to walk in front of their car? Well, I guess if you could afford a car, you could. But today we don't have red flag people walking in front of our cars. Pretty soon we won't have any people walking in front of our cars because they'll be driving themselves and we'll all be inside, doing our work. And ultimately, technological innovation will occur. It's why great platforms like yours exist, to get people to understand how technology evolves and how it impacts all of our lives.
Yeah, for sure. Mark, it's always fun to pick your brain. I love to kind of dive into where this is all going with you. We definitely want to get you back on the show as things start to develop over the summer. But thanks again for stopping in. We appreciate it. Mark Yusko, founder
Awesome.
of Morgan Creek Capital.
Thanks. Really appreciate it.
Yeah.
Thanks, Paul.
All right, so you guys are tuned in over on the podcast side of things right now. Make sure and grab our other podcast, and that is Metaverse Insider. Just search that, whether it's on iTunes or on Spotify, you'll find us there. But the best place to catch all of this great content is right here on YouTube, and just search Paul Barron Network. You'll find all of our great content. Make sure and like and subscribe to a couple of videos that'll help us out and hopefully give you some notifications of when you drop some of our leading content. As we dropped yesterday, it's starting to really kind of make a buzz. So make sure also, if you want to hit me out on Twitter, it's @Paul Barron. We'll catch you next time right here on TechPath.